Okay, I hope I'm live. It says I'm live, but I'm freezing up here. Wait a minute. Wait a minute.
It says it's live.
Okay, I hope I'm live. It says.
Wait a minute. It's working. It says it's live.
All right. All right, wait a minute. Okay, look, good evening, everybody. But I'm hearing two things here. All right, wait a minute. Okay, look, good evening, everybody. I'm going to have to stop this.
Go into the Facebook and you got to mute it.
Is that what's happening? Let me just jump out of here. I've never had to mute it before.
Let's see.
All right. The meeting is being live streamed. We're going to go.
I lost you. You there? Fonz.
All right. The host is not allowing participants to unmute themselves.
Okay, that's you. You're the host.
Okay. All right. Look, good evening, everybody out there in Chester County, Coatesville, and on my Facebook page. Coming to you live on City Town Talk is none other than me, Brother Fonz. And what is happening this evening is I'm doing something a little different. First up, and I'm trying to stream and also have people join in on a Zoom link while still being able to stream it on Facebook. So let me see if this is actually happening. Because if not, we'll just have to do something to make sure it does, because
it's live on Facebook on my phone.
Okay, so you do see it. All right. Well, that's good. Good. Now, what I'm going to do is y'all just bear with me for a second, because what we're going to do, we will have people tuning in via the Zoom link. And also, for those of you out there on my Facebook page, we want you to tune in or stay tuned in while also, okay, I see where we're at, while also typing in any questions that you may have in the comment section. And I'm going to try and work both of those things. And y'all just pray for me as we do this. Ramsey Coulter is actually the guinea pig of what I'm trying to do. Hey, Claudia, you are on time and you're first. Claudia, it is so good to see you. Claudia, I got to see now. Wait a minute. So y'all just bear with me. So if somebody comes in via the Zoom link, I want to be able to let them into the chat room. So I guess that would be, let me see. Oh, no, that would be the chat room. Okay, I'm making some stuff happen here. I see a space for the chat. Would you happen to be able to see it on your end, or I only see it on my end because I'm the host?
I don't. I'm typing. Let me see here. The Zoom. Where is the Zoom? I got so many.
That's right. If you can, it's no problem. I got the chat open in case whoever joins in can type in any question that they have. Okay, I got a couple of people that's watching. Oh, I got Ramsey watching. It's only right that he watches this thing. I'm telling you. Hey, first, once again, I want to say good evening and forgive me for any little slight technical difficulties, because I'm telling you, when you're trying to do something new, you got to crack a few eggs to make an omelet. So that's what is going on. I know it takes a little while for y'all to get on here when I go live, on the Zoom. And so I want to give you all that time, because I don't want him to give any nuggets of wisdom and there's nobody on here. So Ramsey, talk to me and tell me, how was your day today, man? What's going on?
It's going good. Yeah, it's a pretty good day. How about yourself?
Man, I'm not going to complain. Okay. Of course, I've been excited about this evening because I know you always have good information for the viewers, man. So I'm really, really excited about that. I'm healing up from this foot thing, man. It's like crazy.
Right. Yeah, your Achilles, right?
Yeah. And I'm glad I didn't know beforehand how serious it would get because I probably wouldn't have had it done. But it was like a bump on the top of my skin going into my skin, and it's been hurting me for a couple of years putting on my sneakers, my shoes, and all that stuff. It is basically unbearable when it's flamed up. I said, I'm going to finally get this thing off, and I finally got the surgery done. And oh my goodness, man, it was just too much. Hey, Dolores Hunt, thank you for sharing this video. Dolores, you know I've been calling you too, Dolores. You play too much. Anyway, I got you on here now. Dolores, what I want you to do, if you have questions, type it in the chat section because I'll stop what I'm doing and we'll get right to your question, because really the viewers are the most important people or persons during this interview. I do have some preset questions that I'm going to ask Ramsey. So that's what's going on. So y'all keep on coming on and sharing and doing what you're doing. And this is a maiden voyage and me trying to supply a Zoom link, because a few times I've actually had Dolores said for me to call you tomorrow, and she said, hey, Ramsey, see, a lot of times some of my viewers can't get on Facebook for some reason. They can't get on the chat. So that's why I'm supplying the link. But yeah, she said, hey, Ramsey.
Yeah, hey, how's it going? She put a comment about the passcode needed. I'm gonna put that in the messenger right now. I just sent that to you, but you can also join us on Facebook if you're having issues getting on the Zoom link as well, which is on my page and Fonz's page as well. So
is it something that I neglected to do?
In your original post, it has a passcode to get on, but if you already have a Zoom account, usually you just click on it and it opens it up.
Okay, I'm going to type this in the comment section. Is the passcode or password, right?
Yeah, it's a passcode. It's 0224195.
Right. Oh, there you go.
Yep. There we go.
See, that's how you learn. You try and do some new stuff, and this is how we learn. This is how we tweak it out. That's why we're using Ramsey Coulter as a guinea pig this evening, so the next guy gets a break from all that we've learned from him. Ain't that a beautiful thing? That's a beautiful thing. Now, Ramsey, it's been like a year. Can you just kind of like talk to us and tell us a little bit about what has been going on in this year that's just gone by?
Yeah, sure. So there's definitely been a lot going on in the past year in the credit world and in the mortgage world. Lots of changes, some good, some bad. So, obviously we're hopefully coming out of COVID. Obviously COVID's still here. People are still getting it, but it's not as scary as it was, originally for a lot of people at least. And so that's a good thing. But yes, so I mean, do you want me to just get right into it? Just start telling you?
No. I'm gonna feed you. I'm gonna throw some bait out there in the water so I can reel you right on in. Hey, Dolores, let me ask you a question. Did you have any trouble getting on? Because I see that you are on, and just type in the chat section. Did you have any problems tuning into this broadcast? Put that in the chat section, because you're gonna be my guinea pig too, Dolores. So you might as well stay on here and listen to some of the stuff we're going to talk about. Okay, look, Ramsey, now you started off as a credit lender. I'm a try and go in line here. You started off as a credit specialist for years and years and years. Right. But now you seem to be blossoming as a mortgage lender. Can you tell us a little bit about that?
Yeah, sure. So it was a pretty easy transition. I was helping people every day fix their credit. With most of the time, the goal was that they wanted to buy a house. And so, after helping hundreds of people and then thousands of people, it just made sense to not send them to another person, to not send them to a lender. I could just do it myself. And I had learned so much about mortgages and the mortgage industry and the guidelines and the rules, because most lenders don't deal or know about the guidelines with people with not so great credit or low credit. They deal with the easier ones. They deal with the people with great credit. They deal with the people, who don't have credit issues in the past. Not always, but I learned from interviewing a lot of mortgage lenders that they just didn't know their own rules, their own guidelines, and I knew them, and I wasn't even a lender. So it just made sense. So it's been all 3.5 years, almost 4 years that I've been doing mortgages. But it's really been like the last 2 years that I've really been, trying to let everybody know, hey, if you need a mortgage, call me. And if you have, not less than perfect credit, call me, and then I'll help you get a mortgage later. So,
Hey, Sharon, it is good to see you this evening. Sharon DeShields checked in. Actually, her name is Sissy DeShields. Sissy, it's always good to see you. Hey, look, Sharon, don't forget to hit the share button. Dolores, hit the share button. And also, if you have any questions in regards to credit, just how it affects you, student loans, hospital bills, how does that affect your credit? We're going to try and go through a lot of that this evening. But if you have some questions that I may not have thought of, or we didn't take time to share, by all means, type it in there, and we're going to stop what we're doing, and we're going to get right with you on that. Okay. Now, you say you work with people that has less than stellar credit.
yeah, absolutely. I mean, that's the main reason why people reach out to me. I just had a phone call the other day, and a guy called myself, and I said, hey, how you doing? He said, well, I'm not doing too well. That's why I'm calling you. I'm like, oh, people call me when they're not doing good. All right, got it. But that's the reputation that I've had is helping people out of bad situations, giving good advice, giving free advice. And that's the situation with that guy. He was being sued. He was sued by a bank for money that he owed. They froze his bank account. He was, and at that point, he already has a judgment. So there's not much that a credit repair company could do. He already missed court. He didn't show up. So they have a judgment. So they're allowed to freeze your bank account. But he just needed to hear, yeah, pay them, because that's your only option. And so that was just free advice. I just talked to him. He said, all right, once I get my life together, I'll call you back to help with other things. But yeah, so.
Well, Dolores Hunt is giving you quite a bit of praise that you do excellent work. All of y'all, that's our Billa Hunt's daughter right there, Dolores Hunt, who does all that traveling and fixing stuff up and event planning and all that stuff. Dolores, yeah, Ramsey's good, man. And for sake of clarity, Ramsey Coulter is working with MCDC's first time home buyers program. And I don't make any moves. I don't make any suggestions. I don't do nothing until I get it to him and he gets it back to me so I can get it to y'all and give you professional advice. That's one thing at MCDC. We don't rely on what it is we know because we don't know everything. That's why we reach out to the people that do know. And I ain't never leaving Ramsey. Well, me and him tied to the hip now. And I appreciate him so much. Jessica Lane. Hey, Jessica, you got to get in that new house now. Stop playing. Jessica Lane, she got that good credit, but I guess I shouldn't be telling people that. But yeah. Hey, Jessica.
People inboxing her asking her to co-sign for stuff now.
yeah. How about that? Jessica, we got my man Ramsey on. If you got any questions, Jessica, go ahead and ask it in real time, and I'll make sure that we get it to him. So now he's not only doing the credit, but now he can get you a mortgage. I mean, that's one-stop shop. I'm not trying to sell him, but it's just what he does. So, you know what I mean? And when I have people on here, I make sure that I give them opportunities to say what it is they do. This time, I didn't want to get into his family and this and that, because he's been on the show. He's been on this show more than anybody. This is his third time. Not to mention that he's come to seminars that we've had and things of that nature, free of charge. I mean, he's like the best. So that's my story, and I'm sticking to it. So now let's talk about Credit Karma and all these other things that I find people always saying to me as a first-time home buyer program. They say, well, how come I got to get this as opposed to that? Because I already got that. Tell us a little bit about Credit Karma and getting experience individually and stuff like that. Talk to me about that.
Yeah, sure. So there's lots of free apps out there. There's lots of free credit scores, but none of them, no free scores are going to be your actual FICO mortgage industry scores. Sorry, I'm trying to send this password to someone that just texted me and I can't, so I'm not even looking at you.
Oh. We'll have to figure that out for the next time. Make sure it say this is the passcode.
Right. I just sent them the whole thing. But anyway, yeah, the only way to know your real FICO mortgage scores is to either have a mortgage lender pull your credit, which is a hard inquiry, or to pay FICO.com, myFICO.com. And so that's where MCDC sends people to get their credit reports so that they can be reviewed. And you'll see on the FICO report, there's tons of credit scores. There's not just one or two or three. There's not just three scores. There are tons of three sets of scores. Because there's your FICO score 8, which a lot of banks use, your FICO score 9. Now there's FICO 10, there's FICO 10T, and then there's auto industry scores. And just for auto scores, there's tons of different scores just in that category: credit card scores, bank scores, mortgage scores. So there's tons and tons of credit scores, and those are all just FICO. Then you add in Credit Karma and Credit Sesame and Credit Wise and all these free apps. And those aren't even, none of those are FICO scores. They're Vantage 3.0 scores, which the credit bureaus created to compete with FICO. And then you do get free FICO scores from credit cards. Like my Discover card shows me a free TransUnion credit score, but it's a TransUnion FICO 8. And then my other credit card shows a FICO 9 for Experian. And so that's helpful. It's closer usually because at least it's a FICO score, but your mortgage credit scores are the toughest. I explain it, it's like the difference in grading at different schools, different public schools compared to a private school. It's not just an 80 to a 90, an 80 to an 89 is a B. It's more like an 85 to an 89 is a B. For FICO mortgage scores, it's more strict because they're older scores, and because they're going to help you get a mortgage. And so, they are tougher. It is harder. And usually they are lower than those other scores online. Not always. I've seen it go the opposite way. But usually a good rule of thumb is if Credit Karma says you got a 650, you probably don't have a 650 mortgage score. You probably have a 620 mortgage score, or maybe even lower.
That's good stuff. Good stuff. Hey, Christopher Bottoms is checking in from New York. I'm so sure Patrice Proctor is. Hey, don't forget to hit the share button, because our test run with the Zoom link and streaming it to Facebook hit a little glitch. People need the passcode. I thought I gave them the passcode when I put the link on the page, but something got amiss, and that's okay because we're going to keep right on moving. Patrice, Christopher, if you have any questions, type it in the chat section, because we're going to ask that question and Ramsey's going to answer it online. And I don't know why I don't have an ink pen with me. I should have. But check this out, Ramsey. You mentioned a hard hit on your credit. Can you explain a little bit about that while I go get an ink pen?
Yeah, sure. Absolutely. So there are soft inquiries and there are hard inquiries. And so anytime you check your own credit, it's going to be a soft inquiry. So if you go to annualcreditreport.com, or you go to creditkarma.com, or you get a free credit monitoring, or get any type of paid monitoring, it is a soft credit check. It's you checking your own credit. It does not damage your credit score. It does not impact your credit score. If there is a hard credit inquiry, there's the possibility it can hurt your credit, but it's not a definite. People think that, oh, well, every time someone pulls your credit's going to drop. And some people even think that you'll lose 10, 20, 30 points from one credit inquiry. And that's just not true. That's just not the case. On average, it's 0 to 5 points if someone checks your credit. Now, if you're applying for 3 or 4 credit cards all on the same day, each one is going to potentially negatively impact your credit, because it's a hard pull each time. But then we'll go even deeper. When you go car shopping or mortgage shopping, you have a window. Okay, so FICO allows you a certain time frame depending on what you're doing. So for a mortgage, you have 14 days. You have 2 weeks where you can apply with banks or a mortgage company, and it all counts as one. It's called deduping. So the credit bureau, not the credit bureaus, because they don't create scores, FICO does. They do not penalize you because they know if you apply at 3 different mortgage companies, you're not getting 3 different mortgages. You're getting one mortgage.
Mhm.
You're just shopping around for a better rate. And then for car loans, you have at least 30 days, and some credit scores allow for 45 days where you could go to 2 or 3 car dealerships and they might run your credit 5 or 10 times each. And yeah, it looks bad, right? Like it looks ugly because you see your credit and all of a sudden there's 10, 20 credit inquiries or more, but it all counts as one, as long as it's an auto inquiry. So you have time to shop around getting a mortgage or getting a car loan.
Well, good stuff, good stuff. Well, you know what? Our experiment is starting to work a little bit. We have Antoinette Collison on the line. How are you, Antoinette? Antoinette, is your audio up? We'll wait for her. We'll wait for her.
It might be muted.
Hey, look, I want to thank Levi and I want to thank all of y'all that are sharing this video. I appreciate it. But still, you can check in via Facebook. Let us know that you're out there. If you got any questions. Hey, Christopher said, thank you, Fonz. This is great information. Well, don't hang up, though, Chris, because I'm telling you, this guy, he's a warehouse of information. We just began to touch the surface here. Okay, let's talk about student loans and medical bills, because a lot of people who have been applying for first-time home buyers program, when I pulled their credit, they got those bills. Tell me, how does that affect a person who wants to try and get purchase a home?
Yeah, sure. So student loans, if you have federal student loans right now, they are still in forbearance from COVID. So we're going on 2.5 years, almost 2+ years, where federal student loans there's been no monthly payment required. You can make payments. You should make payments if you got the extra money, because it's 0% interest. There's no interest accruing. And so you can pay off your student loans the quickest. But as a mortgage lender, we still have to count those student loans against you. And so a lot of times it's better for certain people to call and get on a payment plan and tell them, I don't want to be in forbearance. I want to start making an income-based repayment plan or an income-driven repayment plan. Because, so I'll give you an example. All the time we have, doctors, nurses, we have even just people who have, $100,000 or more in student loan debt. And the rule is that we have to use 0.5%. If there's no monthly payment on the credit report, we have to use 0.5%. So for $100,000 student loan, we have to pretend like you are paying $500 a month. Okay. And so that's a lot. That's a lot to your debt to income. And so for some people, it's better to call them and start making payments and get on an income-driven repayment plan. So that's student loans. So you were asking about collections, medical collections specifically. And so for medical collections, that's actually what there is a new law that just came out at the beginning of this month, July 1st, 2022. That was one of the new changes I said that have happened. And so for medical collections, and yes, I get this question all the time. Well, I thought medical bills don't show up on your credit. No, they absolutely do. That's not true. Whoever told you that doesn't know what they're talking about. Okay. Medical bills have always and will always show up on your credit if you don't pay them. But now medical bills have to wait a whole year, a whole 12 months. They can't show up on your credit for at least a year from the time that you go to the doctors or the hospital or whatever it is. So that's one good thing. You get 12 months that you basically can either get insurance to cover it if it's covered, or to set up a payment plan. And most of the time with medical bills, if you set up a payment plan, they just won't report to your credit because they're just happy to be getting paid. But the best part of this new law for consumers, the best part is that if you have a medical bill that is on your collection that is on your credit reports, if you pay them or settle them for less, if the company will agree to take less, now they have to be removed permanently from your credit report. And so if you already paid a medical bill, let's say a year or two ago, and it was still on your credit as a paid collection, which still negatively hurts and impacts your credit score, that is poof, gone. As of July 1st, they were purged from the credit bureaus. Any zero balance medical bills are gone from credit reports. And so that's a positive. That's a huge positive for consumers. And so that's a very good thing. And so, if you have medical bills and you want to buy a house, it might be a good idea to settle that. A lot of these companies now, maybe they're not going to give such good settlements. Some companies were given, 40, 50, 60% off, and we're going to see a swing where they're not giving, these amazing discounts because they know if you pay it, that they have to remove it. And so they know you have an incentive now to pay it for less. So that's a very, very good thing that just happened literally, 25 days ago, just this month. So that's very good for medical bills. It's only medical bills. I wish it was other bills. I wish it was every collection, if every collection would delete for payment, that would be great. That would help consumers tremendously, because people don't realize a paid collection is still negative. It still damages your credit. And so people will call and say, well, I paid off all my collections. Oh, well, that's fine, but that doesn't mean they just disappear from your credit.
So they have to get it removed completely. Am I correct?
Well, it's better. Yeah. It'll improve their credit more than just paying it.
Okay, let me say good evening to my two iPhone viewers and Dewey, who's down there. Look, if y'all have any questions that you would like to pose to Ramsey, why don't y'all go to the chat section and type in your question, and I will ask him these questions in real time. I'll stop what I'm doing. I'll stop with my canned questions because you guys are the most important, and ladies. So look, okay, Roberta Steyer, it is good to see you, Norma Asuncion, I always like saying that name. Sister Iris Holmes, it is good to see you this evening. Don't forget to hit the share button. Stop being selfish and let other people hear what's going on. Ramsey is giving out. Okay, here goes a hand. Now, for you who's on the iPhone with your hand up, this is something new that I'm doing. So let me see. How do I do that? iPhone raise their hand. Let me see. Do I hit the hand? Do I go down here? Wait a minute. Reactions. Let me see. Raise hand. I'm trying to see how I let you start to. Oh, how about if I just unmute your iPhone?
Yep.
Yeah, that's it. Go ahead, your iPhone.
You got it. Yeah, so I got a question for Ramsey.
Yep.
So I recently just got healthcare, but before that, I had old hospital bills. So is that going to stay on my credit, or the new insurance will cover that, or how does that work?
Yeah, so I mean, it definitely depends on if your insurance coverage is retroactive, like from whenever you went to the doctors or to the hospital. Most of the time, it's not. Most of the time, it starts, the day that you get insurance coverage, and so there might be medical bills that you still might owe because it might be from the time that you weren't covered. But like I was just saying, the good news is that medical bills can't show up on your credit for at least a year. So that's good. It gives you time. And if they do show up on your credit, you can pay them or settle them for less, and they now have to be deleted. So everything going forward, whatever your insurance covers will cover it, which is great. But there might be stuff from the past that might not have been covered by your insurance.
Man, y'all should have an 8-pin and a tablet down here. This is some heavy stuff jumping off. Hey, did that help you out, iPhone?
Yeah. Answer my question. So I guess would I have to reach out to whatever that's holding my credit? Like, do I have to reach out to them? Like, I got insurance now. Would that cover that? Or
well, you can always try. I mean, you can provide whatever insurance card information you have now. If there's a collector, you provide it to them and tell them to bill it and see if it gets covered. Sometimes it will, and sometimes it won't, and then they'll just say, "You still owe us."
All right, let me go to my next person. First of all, I always want to recognize people. Christopher, I got you covered. I want to recognize Weep Ortiz and Phoenix Gibbs just checked in. And Phoenix is one of the premier dog groomers who's serious about what she's doing. So if you got a dog, and he all hairy, got tar all up on his hair, skin. They can get nasty sometimes. You may want to check the sister out. She is fantastic. We have two of them. I love both ladies, but she's the truth. So y'all check her out. But now let's get to Christopher. He wants to know about FHA loans. He wants that explained to him.
Yep.
And I got to figure out how to lower this hand up there. You go ahead.
Sure thing. So FHA loans. So a lot of people think that an FHA loan stands for like first time home buyers loan, and it doesn't. It's the Federal Housing Authority. It's a type of loan. It's a government loan. It's not a conventional loan. It's not a VA loan. It's an FHA loan. So it's its own type of loan. Anyway, sorry, I'll read that question later. And so FHA loans, they are less strict, so they are easier. Technically, the rule of thumb is you got to have a 580 credit score or higher. It's possible to go lower than a 580 credit score, but you have to have 10% just for your down payment. And then you have to have closing costs. And then you got to have extra money in the bank because you're high risk if you're below a 580. So it is possible to get a mortgage with below a 580, but typically you need a 580 credit score or higher. And realistically, once you get above a 600 or a 620, it's much, much better. It saves you a few $1,000s in cost. And so FHA loans, they are, 3.5% down is the down payment. So that is, so on a $200,000 house, you will need $7,000 for the down payment. But what a lot of people don't realize or understand is that the down payment is just a portion of the costs involved with buying a house. The closing costs are typically the most expensive part. They are, unless you get the seller to cover them, which is starting to come back. It's starting to come back where, the last 2 years has been an extreme seller's market, meaning sellers were getting so much more than what they listed their houses for, tens of thousands of dollars more. I mean, I had clients who paid over $100,000 more, but that, we're not going to get into that. But that's a certain price range too. They were looking at really big houses, but yeah, so 3.5% down, and then the closing cost. And so closing costs are typically about 6%. And so when someone says, how much money do I need to buy a house? The short and easy answer and the easy math is 10%. 10% is what you'll need. So a $200,000 house, you're going to need about $20,000 if you're not getting any type of assistance from the seller or from, MCDC with the first time home buyer program with Chester County Housing Partnership.
That's why you guys, and thank you for that lead in right there. That's why our program, you should really check us out at www.movementcdc.org. I'm going to try and type that in when I get a free hand, because we hook you up. We're resource navigators, and we will navigate you through the system. Whereas right now, Housing Partnership is allotting like $20,000 if you're willing to purchase a home in Coatesville, $10,000 out of Coatesville. And this is why you need to really get in touch with me. And this is why we have Ramsey on. And I already said it. Me and Ramsey, we joined at the hip. When I get it, I make sure he gets it, and then he makes sure I gets it back. And then he brings it on to you. Hey, Christopher said, thank you. Tina, it is good to see you. It's good to see you this evening, Tina. She has two first names. That's okay. And they're both the same. Okay, where are we at now? Dewey, do you have any questions down there? Or are you okay? I see you're listening, and there's no picture there, and that's okay. You mentioned debt to income ratio. Kind of spell that out so us laymen can understand what that is.
Sure. So it is how much you make, not how much you take home, how much you make each paycheck or each month, really. And you divide that number by 2 is the easy answer, because conventional loans, you can't spend more than half of your income. FHA does allow you to go up a little bit higher. But basically, you take half of your income, and then you have to subtract any of your debts, and your debts are only what is on your credit. So it's not Pico, it's not Verizon or DirecTV. Those don't count against your debt to income. It is if you have a car loan that's on your credit, if you have credit card debt that's on your credit. If you have student loans or personal loans, that is subtracted from your monthly income. And then what's left over is, how much you can get approved for. So people think, I had someone with, a 580 credit score. I got him a pre-approval, and and then, we got their credit up during the process, and she thought, well, now that my credit's a 620 or 640, I can be approved for a lot more of a house. And that's just typically not true. Your credit score doesn't get you approved for more typically. Sometimes it can, because obviously, if you have a higher credit score, you're going to get a better interest rate, which does reduce your debt to income. But it's how much you make and how much your debts are that are on your credit is how much you get approved for. Of course, there's an interest rate, but you're always going to have some sort of interest rate. So,
hey, my man Levi, he just checked in. He's one of my faithful viewers and friend. He's making a statement, and Levi purchased his house. He was on my show maybe about 2 years ago almost, and he got his home. And Levi and his wife, they worked all their credit stuff out on their own. So let me say, so Levi said to the gentleman that asked about the hospital bills, collect all of the outstanding bills that show up on your report. If they are in collections, call the collectors, and a lot of times they will work with you to get those paid. But ask for or pay for delete. Ask for a pay. I don't know what that means. Pay for delete. They will not go away on its own. My wife and I went through it buying our home. It may take time, but you can do it. I got a second job at the time just to fix the debt on our credit. Good luck. Okay, he did it in 2020. Hey, good looking out, Levi. Levi, him and his wife, they really worked. They worked that program. They really did. Yeah. And God bless him, because I probably would have never did it. I'd have been calling Ramsey. Hey, Ramsey, look, I'm busy. Can you make this go away? All right, now let's see who else I got out here.
What he was saying. So a pay for delete is where the debt collector agrees to delete it from your credit for payment. But Levi must not have heard the new law that for medical bills, they do go away on their own now. Once you pay them, they have to legally, or else they'll get sued and get in trouble. And Levi, that is a brand new law, literally just came out July of this year. And so if you pay a medical bill, even if you pay it for less, it has to be deleted from your credit permanently. So all the work you went through, not everybody else is going to have to go through nowadays, but that's only for medical bills.
So use a trailblazer, Levi. Thanks, man. You made it easy for everybody coming behind you. Now, there's something that you said, because there's something that you said that I didn't know. And when you were talking about debt to income ratio, you said, so now when we're calculating their debt to income ratio, don't include their utility bills. And what else was it?
Well, anything that's not on your credit. So,
okay.
It's your grocery bill is not included, your cell phone bill, your car insurance, your TV bill, your whatever, all that stuff, that's not counted. That's not counted for your back end debt to income ratio, which is the most important part for a mortgage, at least.
Man, I appreciate that, man. That's worth the price of having you on right there, man, because I'm going to give people good information. Antoinette, she's connected. She must have went off and she came back. And that's okay. Let me see. All right. We already talked about the 2 reasons you should pay a collection, right? I think we already hit that now.
A little bit, yeah.
Okay. Is this a good time to refinance your home? And can you do it with paying minimal closing costs?
Sure. Well, it's not necessarily the best time right now to do a refinance. It was 6 months ago, at the beginning of this year, all of the last 2 years, it was the best time in the history of mortgages to refinance. But now, so at the beginning of this year, interest rates were in the 3% range. Now they're in the 6.25% range. So, we went from 3% to 6% in 6 months, which has never, ever happened before. But that's where we're at. The government, printed out $15 trillion, and we all knew something was going to happen. So, here we are. But it all depends on the situation. I have a gentleman going through a divorce right now, and he has to refinance. He's court ordered. He has to. So yeah, he's going to get a worse rate, but he has to do it. So, every situation is different. But yeah, so with a refinance, it is minimal costs. A lot of times the costs involved can be rolled into the new mortgage, only for a refinance. So I don't want to confuse people, because that's a very hot topic question all the time. People say, well, can't I just roll my closing cost into my mortgage? No, typically no. For a refinance, typically yes. Okay. So it's a big difference, but a refinance means you already own a house and you're just refinancing it to either take money out, to take equity out of the house, take out 20 grand, 30 grand, pay off some debt, credit card debts, or something like that. And typically the most important reason is to get a better interest rate. But again, everybody's situation is different.
All right. All right. Hey, Tina Madsen, it is good to see you this evening. We have Ramsey Coulter on, our credit and mortgage specialist. This is the third time Ramsey's been on here, and this is who MCDC deals with it 100%. It's good to see you. Hey, iPhone, did you have a question? I seen your hand up. I'm gonna unmute you right quick if my mouse works. Okay. Did you have a question, iPhone?
I did, but yeah, Ramsey answered my question now. And I had another question about a car note. So is it a good time to purchase a car right now, or like with the economy, like the way the economy is right now? Because my credit was in the fives less than a year and a half ago, and Ramsey helped me. Now it's like 7, one's in the 8. So I'm thinking about getting a vehicle, but I'm not sure, like with the way the economy is, if it's a good time or if I should wait a year,
Well, so it depends. I'm not a car salesman, and I know a lot of great ones. So, if I say something bad, they might not like that. But, just like houses, the price of houses, the prices of cars are way up, for good or bad. If you're selling a car, it's a great time. If you're buying a car, it is what it is. But, if you need a vehicle, you need to get to work, you need to get places. I mean, sometimes you don't have a choice. So, that's my answer on the air. But
All right. So it looks like Antoinette Collison just checked in. She's got coffee. She's got a cigarette going on. She's in her car. Good evening, Antoinette. How are you doing? Maybe she'll answer me later. Okay, my son just checked in, Alfonso New Swan. Hey, it's good to see you, son. Hey, look, now that I'm looking at my son, I tried to pull his credit the other day, and there was nothing there. How can my son or anybody else who doesn't have a credit rating, because I've had a few applicants that just had 0, bottomed out, they had nothing. How can they get a credit score?
Yeah, sure. So you need to open up a credit card. And so a lot of people think, I've dealt with a lot of old school people who are cash only, and they don't want credit. They don't want to deal with it, but they want to buy a house. And my answer always is, well, do you want to buy a house? And they said, well, of course I want to buy a house. That's why I'm talking to you. I said, well, then you need to open up a credit card because okay, to say you have to have a credit score is not 100% true. You can do a manual underwrite with no credit score. It's just a lot tougher. You get a worse interest rate, and it's a much more invasive process. Now you have to prove that you've been paying a utility bill for the past 12 months. You have to prove you've been paying rent for the past 12 months. You have to prove, all these different things. Whereas if you just open up a credit card, and opening a credit card doesn't mean you need to use it. Opening a credit card doesn't mean you will be in debt. You will only be in debt if you use it and don't pay it back. And with credit cards, and yes, this is easier said than done, you should not use a credit card if you cannot pay it off in full in 30 days, because then it will start to accrue interest. And any credit card, any interest rate on a credit card is a bad interest rate. I don't care. My best interest rate on a credit card now, they're going up now because the feds keep increasing interest rates. But it was like 8%, which people are like, wow, that's really great interest rate on a credit card. And I'm like, yeah, but it's still bad. But most credit cards are 20+%. I got plenty of credit cards that are 20, 24, 26%. mostly, like store cards like Lowe's and stuff. But you should not use a credit card if you can't pay it in full in a short period of time. If it's a couple months, fine. If you have a goal, or if it's 0% interest. But for people who say you've got to be in debt to have a credit score, you don't. You just need a credit card open for 6 months to generate a mortgage score.
So now supposing a person can't get it from their bank.
Sure.
What is it? What is the credit card?
Yeah, secured.
Secured credit card.
Yeah, so most banks offer a secured credit card. Not all of them do. And then same with credit unions, so a secured credit card, you give the bank a security deposit. You give them $300, $500, whatever their minimum is. They hold on to that into, basically in a savings account. They hold on to that. And a lot of them, if you pay it, if you make the payments on time for 12 months, some of them will give you that money back right then and there. Others, they won't give it back to you until you completely close the credit card, which of course you can do after you buy a house, and then you can get your $500 deposit back, and now you got $500 to go do whatever you want. But most banks offer them, and if yours doesn't, you can reach out to Fonz or me. There's plenty of recommendations we can give out there. It just depends, because obviously if you owe a certain bank money for a credit card in the past, they're not going to give you another one typically, except Capital One. They give everybody credit cards. They give people second, third, fourth chances, man. So.
Oh boy, I'm telling you, I'm leaving them alone. Hey, all right, look, I know you already mentioned this, but tell me once again, how does hard inquiries affect your credit score? It's like, and what's an example of somebody doing a hard inquiry? Is that like when somebody's trying to buy a car or something like that?
Yeah, so yeah, there's soft credit inquiries and there's hard credit inquiries. And so a soft is when you check your own credit, or if you apply for like car insurance or homeowners insurance, they just do a soft check. They don't do a hard, they just see a snapshot of your credit. They don't see the whole thing. They just want to see certain factors. And you give them permission, and it does not hurt your credit. But yes, a hard inquiry is when you apply for credit. So a lot of times if you apply for, of course, a car loan, a credit card, a mortgage, a personal loan, a student loan, even apartments, sometimes they used to do hard inquiries when you would go for a cell phone. They did change that. It is now a soft inquiry. So that's a good thing. But inquiries, at the end of the day, inquiries aren't that big of a deal. Okay. People get all caught up in, inquiries, this and that. Look, if you have great credit, then who cares about inquiries? All right. If you have good credit, it's not that big of a deal. If you have bad credit, then yeah, it's a different story. Then it's a big deal because your credit's already low and you don't want to do anything to make it lower.
Right.
But usually the rule of thumb is 0 to 5 points. That's when you apply for a credit card or a car loan or a mortgage, you can expect 0 to 5 points. When I applied for a mortgage, I monitored my credit through FICO. I lost 0 points. My credit didn't move at all. Not even 1 point. So it just depends, but it's not that big of a deal. But you should not be going out applying for a bunch of credit cards, because I said, well, Ramsey said it's not a big deal. If you're in credit repair or if you're building your credit, it's a big deal.
Okay, hey, look, Jasmine Edwards, is good to see you this evening. My man, Stephen Alette, it's good to see you. I know y'all missed quite a bit of this, but you'll be able to recapture it, because I'm going to play this over and over again, right? Okay, man, can you hang with me a little bit longer, Rams? Are you okay?
Yeah, I'm good. So
all right, good. Because there are some questions that I want to hit. Let's talk about the student loan. What suggestions do you have for students who are going to college and using student loans to cover their costs? And what suggestions would you give them in regards to credit?
Yeah, sure. So yeah, obviously if you're in college, you're going to need student loans. And, if you have to start getting private student loans, that's where it gets tricky. That's where the rates get really bad. The federal loans are as good as it gets. But yeah, I guess my words of advice would be, make sure you find a college that's affordable, that's in your budget, because, you know, I talk to people every day who graduate college, they have, you know, 70, 80, $90,000 in student loan debt, and they come out and get a job making, you know, 40 grand, 45, 50 grand. And that's a tough situation. So, you know, a lot of those private schools, they're expensive. So if you don't have scholarships, you might want to rethink where you're going to school. There's a lot of great, you know, public schools, state colleges that are more affordable. But yeah, that's but yeah, if you're in college, you're going to have a couple student loans. You might have 10 student loans. Just get a credit card, barely use it, or don't even use it at all, or use it once a month just for gas or something like that, and pay it off, and don't get in credit card debt. That's my best advice when you're in college.
All right, let's talk about credit card utilization, since you said don't use it that much. Give us a figure and a number for it to be good credit card utilization. What percentage and all that?
Sure. So the rule of thumb is 30%. That's the general rule of thumb. That's what most people will tell you. I'm going to tell you 10% or lower. Zero is the best credit utilization. That's not actually true. 1 to 6% is the best, but 10% is easier to remember. You know, so if it's a $1,000 credit card limit, yeah, no, you shouldn't be using more than $100. You can, and it's perfectly fine to use $300 or even the whole 1,000, as long as you're paying it off in full at the end of the month, and you're not in the middle of buying a home, or you're not in the middle of applying for a credit, because it's going to greatly affect your credit. You know, here's a real example. A client had one credit card. It was a $1,000 limit. They owed $900 on it, and they couldn't believe that they lost 85 points on their credit score overnight. It was a month, you know, by the time that reported. They couldn't believe it. I said, okay, what's the easy fix? Pay your credit card down. Pay it back down to $300 or to $100. And they did, and boom, score shot right back up. But they just couldn't believe it. And it's a huge factor. It's the second most important factor, right behind on-time payment history, is total debt. But most of that 30% is credit utilization or credit usage. So it's a very important factor if you have credit card debt.
I told y'all to stay up and come on this show tonight, because there's a lot of information. I'm telling you. Hey, look, Jasmine Edwards, here's somebody else that you must have treated real good, Ramsey, because she said, hey, yes, great video and info from great company. Now, ladies and gentlemen, look, this ain't no paid show. Now, when a lot of people start getting into the chat talking about, yeah, man, he raised my John to like 700 and all that stuff. You really need to look this brother up. And before we end this, he's going to give you your information, or he'll type it in, or we'll say it. And so if you have any kind of questions about credit and mortgage, you want to come to this guy. But let me see. We're getting ready to wind it up pretty soon. Okay, let me see. We already talked about good credit and bad credit. What did you say is good credit?
Well, I didn't, but
Good. I was wondering if I already answered. Let's talk about it. What's good credit and bad credit.
Well, so that's pretty broad. I mean, typically speaking, if you have over a 700 credit score, you got really good credit. You know,
Yeah.
700 plus is good. That's really good. You know, 740 is excellent. You know, middle of the road, you know, anywhere from 600 to 690, you know, that's middle of the road, and that's okay. So it might be fair, it might be good. You know, below 600, that's not so good credit. It's not the end of the world. If you're in the high 500s, lots of people are. Usually they have a couple lates on a credit card or a car loan, and get what I just was saying, their credit cards are usually very high utilization. And so that causes credit score to drop significantly. But yeah, I mean, if you're in the 400s, that's bad credit. That's real bad credit. If you're in the 350 range, that's as low as it goes, 350. So, you know.
So when should a person utilize your services as a credit specialist?
Yeah, so
what do you recommend?
Well, so first of all, I mean, we always offer a free consultation. we don't just we don't sign up everybody, that there's a reason why if people look us up with the BBB, we have an A+ and 30 reviews there. If they look us up on Google, we have almost 100 5-star reviews. They look us up on Facebook, we have almost 300 5-star reviews. There's no negative reviews anywhere. Why? Is because we don't sign up people if we don't think that we can actually help them. And so it's always good to just call us if you have questions, because we'll do a free consultation. We'll look at your credit. It's a soft credit check. It costs $1. That dollar doesn't go to us. It goes to a credit monitoring company so that we can see your credit. And then we'll tell you, there's plenty of times where we tell people we cannot help you, but you can help yourself. You need to get out of credit card debt. You need to stop being late on your credit cards. And it might sound like basic advice, but they were about to pay a different company who was really going to do nothing for them except send out letters to try to get some late payments removed, which is very, very unlikely because they were still late on their credit cards. How am I going to get something removed when you're still late? It's not going to happen. You got to get current first and get out of that credit card debt or whatever it is. So you get bad reviews when you don't do what you tell people you're going to do. So.
Okay, good. That's good stuff. And I'm going to segue right into MCDC. This is another reason why you should plug in with us. We will pull your record, and Ramsey will assess it at no cost to the viewer, to the applicant at all. As a matter of fact, we foot the cost. But Ramsey will give a blueprint on what you need to know to get you to where you say you want to go. Now it's on you to do it.
Right.
But we will, MCDC and Ramsey, we will provide you with that blueprint, that information, bam, enough for you to start working on your own stuff. That's why this is like a marriage made in heaven. And I appreciate him so much. Let me see it. Now, Ramsey put his number, in there. He put a couple of numbers, something to look real official, mortgage lender number.
I tagged both pages. I tagged the credit repair and the office number, and then I put my mortgage page down there too. On my mortgage page, you can message me or we'll connect as well that way. Either way.
That is good stuff. You know what? I think it's been almost an hour, Ramsey, and I think it's been a good hour well spent. Let me see. So let me just ask. Oh, wait a minute. The iPhone number 3. I want to ask iPhone number, if I can. iPhone number 3. Do you have any questions from Ramsey as we get ready to come to a close? No. Okay. All right. Hey, look. This has been an interesting hour. I tried something new today. I see that it can work. I just had to make sure that you get a passcode and things of this nature. But we did have some viewers that came on via the Zoom link. I'm excited about that. We still had our viewers. Don't forget, Jasmine, Stephen, and Tina, could you hit the share button so we can share this whole show with the listeners, man? There's a lot of good information on here. And of course, I'm going to repost it. I'm sure people are tired of me. But we've come to that hour, Ramsey. Now, look. Before we, wait a minute, we got a hand up there. Let's see, iPhone number 3. Don't leave me alone. Okay, let me see. Okay, go ahead, iPhone number 3.
Yeah, I just had a question on business credit. So I just opened up a restaurant and I'm looking to get my business credit higher. What's the best step I should take?
Yeah, sure. So you can set up an account with nav.com. They do have free options, but if you want to see your full business credit reports, you do have to pay a monthly subscription, but they do have a free option. And you need to start building your business credit with net vendor accounts. So net 30-day accounts. You can go to Dun & Bradstreet and for free, you can get a D&B number. They'll try to sell you a package and charge you $500, but you can just Google free DUNS number and it'll take you to their website and you can get a free number. And then once you have a DUNS number, now your business exists in the business credit world. And you want to make sure, if you have a business phone number that it's connected, that it's it's in Yellow Book. I know people don't know what that is no more, but Yellow Book, and on the listing sites and everything, Google, you want to make sure that your phone number, your business phone number shows up, your business address, because those are important things. And you build your business credit from scratch. So there's net 30-day accounts. So like Uline, which is the letter U, Line, uline.com, is very easy to get approved for business credit. It's a net 30-day account. So you order $100 worth of stuff from them, that you pay it in 30 days, and they report to at least Dun and Bradstreet, and I think Experian with Uline, and then Quill, Quill.com. Those two are very easy beginner credit builder accounts for business credit. And so paying a business credit account early is very beneficial. You want to pay it at like 20 days because you get bonus points. It's not for personal credit. Personal credit, you don't get no bonus points. You can pay your credit card 3 times a month. You don't get no bonus points. But business credit, you do. It's completely different. So that's how you want to start.
Hey, did that answer your question? Number 3. Hopefully it did. All right, look, we've come to that hour. My mouse don't want to work. Hey,
Yeah,
look.
it does.
Okay, good. All right, so now let me ask you, Ramsey, do you have any kind of like parting shots, any kind of information that you would like to impart to our viewers this evening before we wrap it up?
Yeah, I just thank you for having me on, Fonz, of course. And if anybody has any questions about credit or getting pre-approved for a mortgage, they can reach out to me on my personal page or on the page. I tag the business pages there. Get connected with Fonz. If you're in Chester County, Pennsylvania, you definitely want to look into MCDC's program. It's at no cost to you. They'll connect you with the housing partnership. And for some people, that's a great program. And for some people, it just doesn't work, but that's okay. It might be, maybe they make too much. Maybe there's just too many, negative things on their credit. Mm-hmm. And with that program, you have to, you can't owe any money, any negative accounts. Yeah. So, if you got like 2 repossessions, you probably ain't going to do that program because
right.
You have to pay them off and now it's not worth it. But yeah, I mean, the free consultation that we do with clients is what MCDC does. It's it's a lot more in depth and it's written down, but it's always up to you, like Fonz said, to execute.
Hey, let me ask you a question while we're talking about repossessions. Supposing a person has a repossession and they come to your company and they have 580 or 600, could they get a mortgage?
Oh yeah. Yep. Oh, for sure. Yeah, I've had lots of clients. I had a client the other year. He had 2 repossessions. They were old, 4 or 5 years old, but they were like $30,000 combined. He was denied by a bank. I won't say the name of the bank, but a local bank denied him, not Coatesville, but
okay.
A bigger one. A local bank denied him and said they actually told him that he had to pay those off in order to get approved for a mortgage. And he was about to settle them for less. And he would have, he owed the money. So to say he would have wasted, $10,000 is not 100% true, but he didn't have to. He came to me, I got him a mortgage. He didn't pay them off at all. And, as long as they didn't sue him, which they had not, it won't stop him from getting a mortgage. And so, no, you can get a mortgage. You can get a mortgage with repossessions or charged off accounts on your credit.
All right. Now, y'all know who they done took y'all car. You need a house. See Ramsey and stop playing. Hey, look, Ramsey, I want to thank you for allowing me to just, come into your house, man, Zoom to your room for this hour that we spent, man. Yeah, the information is always amazing. And I always learn something new. I learned a couple of things new this evening, especially about the debt to income ratio, because I don't want to scare nobody, because I do look at people's budgets and stuff like that. And it's scary, but there's some things that I was looking at, not that I made any kind of decisions on it, but I looked at it, I'm like, man, this is kind of like out of whack. But I was adding up everything, cleaner bill, and all, everything they had on, I was adding up. So I appreciate for that clarity, man. But look, I want all my viewers and Ramsey and anybody else, don't forget to share this to Rob Jennings. I just seen you had some sort of something on here. So I know that you're on here. Rob, hit the share button, man, so we can share that with some other people, some of your friends, because this is some good stuff. And this is free too. This is free. To get all this, man, most places you had to sit down and give them something, buy them dinner or something, lunch or whatever. But anyway, not Ramsey Coulter. He's doing it out of his good heart. Hey, look, if nobody told y'all that they love you today, man, Brother Fonz loves y'all. I truly love y'all. Ramsey, I appreciate you so much. Coatesville's rising. Take advantage of all these things that are being presented to you on my show and in other organizations, and we can all rise together. If all hearts and minds is clear, make me feel like I'm getting ready have benediction at church. But no, I'm not going to do it. I just want to say have a great night and talk to y'all later. Peace out.
See you, Fonz. Thanks.
Bam.